All right, I guess we'll get started. I've got with me some seasoned mortgage brokers and managers of Mortgage Investment Corporation. I would like to introduce them to you. We've got Mr. John Ribalkin, Ms. Hali Strandlund, and Mr. Gord Wintrup. And shall we get started? I'd like each of you to tell us how long you have been a mortgage broker and operating a mortgage investment corporation, and tell us a little bit about what that looks like. Can we start with you, Gord?
I started mortgage brokering in 1973, became head or formed the first MIC in the Fraser Valley in 1984. It's changed since then. It was relatively small when we started with $180,000 of capital, looking at funding a few small second mortgages to facilitate home purchases and whatnot. Today, our mix total just in excess of $50 million, and we run I guess a good balance between first and second mortgages, about 60% in first and 40% in second mortgages.
All right, and what about you, John?
Started the mortgage business in 1977. Moved to BC in March 78, so it's 35 years here, a couple of years behind Gord, a few years behind Gord. Started the MIC in 1990. We're just a small family and friends MIC, dealing a lot in second mortgages, going several times behind some of Gord Wintrup's first mortgages.
Okay, and Hali, can you tell us about your experience here?
You bet. I've been a licensed mortgage broker since 1989. Basically mortgage brokering and real estate sales at that particular time. The MICs were formed, the four Fisgard Capital MICs: Fisgard Capital, Fisgard Mortgage Investment, Fisgard Mortgage, and Fisgard Financial. At that time, 1994, we thought all the MICs would do something slightly different products. As it turns out, it wasn't necessary to run four MICs. So in 2000, we amalgamated them into one MIC. And about that time, we were still mainly a friends and family MIC, but we got to about $10 million worth of capital. And since 2000 have run just Fisgard Capital Corporation and about $235 million in capital with a large line of credit behind that, lending generally first mortgages in BC and Alberta, some commercial and construction as well.
Okay, so you've all been in the business a considerable amount of time. You're aware of the different regulatory requirements for mortgage investment corporations. John, tell us about your registration number under the Mortgage Brokers Act.
Personally, 024617.
What does that mean?
I was a 24,617 sub-mortgage broker registered in the province. Norm Goodfellow was the Deputy Registrar of Mortgage Brokers at that point in time. But that's talking, 1978.
Okay. John, tell us about your compliance. So you are a registered mortgage broker, and your registration with the Mortgage Brokers Act enables you to conduct borrowing activities, lending activities with the public. But tell us about your compliance on the security side, dealing with investors. How do you comply?
First of all, we're just a small family and friends MIC. Our MIC is only 34 individuals. Each one of them has signed forms that state that they could potentially have a loss, and they signed that form 2 or 3 different times. We don't have a prospectus. Didn't have to have a prospectus when we started the MIC in 1990. And basically, if there's any new shareholders that do come in, they're directly a friend or family member of a current shareholder.
Okay, and what kind of reporting do you currently do with the BC Securities Commission?
We're under the exemption and the exempt market dealer status right now. We keep, when they first came out, we went underneath that exemption, and we keep on applying under that exemption at the present time.
Okay, all right, good. And Gord, you're obviously registered to deal with your, in the lending aspect with the public, but tell us about your compliance and how you comply with BCSC.
Much the same as John. We use a securities lawyer to file under the exemptions. All the necessary forms signed by each of the shareholders as to the amount of risk or the degree of risk. Pretty much the same as what John has been doing.
Okay, so you're relying on a family, friends...
family and friends of our directors
Right.
of each MIC. We run 3 individual MICs.
Okay, and are you complying with the BCSC reporting requirements under the temporary exemption?
Yes.
Yes, you are. Okay. All right. And Hali, you're in a bit different position because I understand that Fisgard is one of a handful of mortgage investment corporations that have actually obtained exempt market dealer registration status. And just for everybody who doesn't know, the removal of exemptions, which is proposed by the British Columbia Securities Commission, would in effect require mortgage investment corporations to obtain exempt market dealer registration status or utilize the services of an exempt market dealer. So can you tell us a little bit about your journey to that registration process and how you were complying and what prompted you to obtain status as an EMD?
Well, it was, when it first came about that we knew these changes were coming down the pipeline, even though there was an exemption, because of the size of our MIC and the fact that we had 3,400 investors and did not know when this was going to kick in, if the exemption was going to stay, we really had to move quickly and thought it was in the best interest of our investors and the MIC itself to become compliant, as if the rules were in place, as if the exemption was gone. And we went about that shortly after we heard they were going to do it, which was costly, timely. We have a lot of staff that went through a number of courses, including myself, that had to become registered. Now it's a process that we're learning. It's something that's new to us. So as far as reporting goes, we just completed our first BCSE audit that has basically set out some guidelines that we all need to follow. Of course, we're still following under the know your client rules. You could lose all your money, risk acknowledgements, etc., but it's something that's very new to us and something that I believe that will evolve over time, but it is onerous nonetheless.
Okay, can you just give us a little bit of detail, if you can? You describe it as onerous. So you're the largest MIC, if I might say so, in this province.
Yes.
And some compare you in status to a credit union. They say, well, Fisgard is equivalent to some of the medium-sized credit unions. So you've got a sizable entity there, and yet you're saying it's onerous. Are you talking about staff time? Are you talking about, cost
Yes.
to comply?
Well, cost to comply for sure. I would say our annual audit, $25,000 easily, the size of our MIC. Education, staff time, documentation, reporting requirements. It's something new, but it's part of our business. And we're just assuming that it's not going to change. It might, but the fact is that's the way what we're running under right now. And it is timely and it is expensive. As far as the intimate details of how we report, etc., that's something you have to talk to all our girls at the office about, but it's something that has completely changed our administrative process.
All right, so you've had to add to your administrative process. What does that amount to? Have you added, for example, extra staff for compliance, or how?
No, we have, right now our compliance officer is on maternity leave, so we did actually have to go to an outside compliance officer, which has added, of course, more expense. It's just something that it's really hard to detail the cost at this particular time. If you asked me a year from now, once we've been fully running under this, I could probably give you better numbers. But it's time. It's time, and it's overall, time is money. I'd rather have them meeting with investors than processing paperwork and reporting.
One of the hallmarks of exempt market dealer registration is the requirement to have an interview with a prospective investor and to provide what is called suitability advice. And in terms of being an advisor on suitability, it's your role as an EMD, an exempt market dealer, to be objective and to provide investment advice in general about your mortgage investment corporation and potentially other investments as well, potentially other MICs or potentially other investments. And one of the suggestions that has been made is that you're not really equipped to do that because you may not be a financial advisor with that knowledge. In addition to the fact that you might be in a conflict of interest position because ultimately, your goal is also to sell investors with your own MIC. Can you comment on that, Hali?
Yeah, and I somewhat agree with that. We don't talk about other investments. We are only talking about the Fisgard mortgage product. And it does put you in a bit of a difficult position. You're always disclosing, but when the EMD status is telling you, yes, we can go talk about these things, am I prepared to do that as far as other investments go? No. That's why I think maybe the exempt market dealer is taking it a little bit too far. We really are only dealing with one product in our particular MIC. And that's all we talk about, yet we're under another set of rules. So do I think there should be more disclosure and education? Yeah, I do. Do I think that the exempt market dealer was the way to go? I'm not so sure about that, because we don't talk about other investment opportunities. We don't do that at all.
Okay. Gord, have you considered how, if this proposal comes into action, you're required to obtain EMD status, how that might affect your operation?
Yes, we have. We are taking some steps as far as Hali alluded to, the education, the courses. We've met with two different exempt market dealers, and as to the cost of outsourcing it, so far it seems to be 1% of all transactions would go to the exempt market dealer, driving up costs and either taking it from our bottom line and away from the investor, or forcing us to pass that along to the consumer. Right now, we have a good product that, say, bridges between, I'll give an example. If someone has bruised credit and you can't go to the bank, unlike 2 years ago where you would find a few other institutions, a MIC is a good, viable source to get the funds, deal with your creditors, clean it up, and then say goodbye to us next year and be in the bank. That's going to cost that consumer, who is already paying too much through his credit cards, much, much more.
So, what you're saying is the cost to the consumer? Are we talking about the mortgage borrowing public, or are we talking about the investor? We talked about an extra 1% cost if you utilize the services of EMD. How do you see that cost being passed on?
In interest rates or brokerage fees or lender fees. The investor has put his or her money with one of our MICs. They're expecting, let's say, anywhere from 4 or 5% above prime as a reasonable return on their money due to the risk involved. If 1% is being taken away in cost, it's going to be added back on somewhere. It's probably going to come on a lender fee that we do not currently charge.
Right, so you are anticipating that the borrower is going to be paying the burden of this 1% interest rates?
Most definitely.
Right. And is that your understanding about how other MIC operators might pass on that cost?
I haven't talked to a lot of them, but I've talked to a handful of them, and they all feel the same way, that they can't reduce the yield to their existing investor much more than it has. The marketplace has done that anyway, so that'll be passed along.
Okay, so John, you're in a bit different position. You've got what we would call a small MIC. Have you considered what compliance might look like for your mortgage investment corporation?
Actually, I'm hoping for what Gord's addressing there, but maybe get a community EMD out there that we have to subscribe to, pay the 1 or 2% fee that we have to. But again, we're going to pass the cost on to the borrower because the investors don't want to carry the cost. And if we can't get that community MIC, a community EMD, we're going to be in trouble. And we might have to dissolve that mortgage investment company, and all the shareholders might become individual investors again, and where they started from. And one of your other comments to Hali, or questions to Hali, relative to the what happens to somebody when they come in to see us to subscribe, which is the for the MIC, is they come and meet with me. I sit down with them, as Gord and I both have. We have over 40 years experience in the banking and mortgage industry. I sit down there, first of all, I make sure they don't have leverage funds with us. That's from their own savings. I advise them of the risk factor. I advise them that sometimes we do lose on a foreclosure. There is some potential losses. And then I let them go away. They don't give me money for at least 30 days. I want them to think about it before that money is ever brought into the MIC.
Okay.
It's really important. We still, one of the reasons why even the exemption was available and we became exempt market dealers, we want them to come in and meet with us. We don't necessarily want them, you talk about a community EMD, we don't want them just out there with any exempt market dealer talking about our Fisgard products. We want to meet with the investors. We want to understand intimately who they are, what their investment strategy is, but what's good for them and for Fisgard. So if it's just out there in the marketplace, we have no control over that. So we really like them to be in the office, and that's one of the reasons why we became dealers so quickly, is not to lose control and knowledge of our clients.
Right, so one of the concerns is that if you outsource the EMD function to a third-party EMD, they might be advising the investor to, not even invest in a MIC, to invest in some other kind of investment vehicle.
One that they're more
Possibly.
familiar with.
Right.
Or that they get paid more for.
Very much so.
Do you think that EMDs are commission driven? That might be a concern as well? That's been one of the allegations raised by the industry.
Very much concerned about
Yeah.
that. I've spoken to several financial planners. Some of them have been very candid in saying, no, I can get 4 or 5% if I put it in this product or that product. I'm not saying that's what they should be doing, because they shouldn't. We should be doing what's right for the investor, and much the same as my colleagues, we meet with each and every investor. We know where they're coming from. It's recommended usually by a family or friend, or a friend of one of the directors. But we still sit down and make sure it's more long-term money that they're looking at, rather than parking a few dollars for 6 months or something like that, and that our product fits with their needs.
Okay. One of the rationales by the British Columbia Securities Commission, they've spent the last year working on basically justifying this proposal to remove the exemptions. And they've come to the conclusion that only $1.8 million would be taken out of the available pool of mortgage capital. And we're kind of wondering if that sounds right to the industry. So obviously we're not in a position to do a statistical analysis of their project, particularly intuition or comments or concerns really about what it might do in general terms to the mortgage borrowing public's access to capital. John?
First of all, our MIC may dissolve. That money may not go, because those people have been investing in mortgages for quite a few years. But they like the ability to, if there is a loss, they bear that loss with their other shareholders within the MIC. It's for some of them too, they've aged over the last 20-some years, and now their risk parameters have increased. They addressed me at the AGMs to lower the loan to values on the second mortgages, and we take direction from the shareholders, and we take advice. They say we may not want that bigger return. We may want you to reduce it and help us, and if you agree to that, then we'll stay as shareholders. But a lot of those people may leave the industry altogether and take their money right out of mortgages and put it into GICs or other cash to tax-free savings accounts or whatever.
So what you're saying is that your investors have a personal relationship with you, there's a trust factor, and if they don't have John Ribalkin, they might go elsewhere with some kind of investment vehicle.
Well, they have a trust factor with me, and one of my other senior directors has 39 years as a qualified appraiser, AECI. Between the two of us, we have, well, in excess of 3/4 of a century of experience in the mortgage and appraisal industry. That is a trust relationship.
Okay, Hali, do you have any comments about this issue?
Very similar to us as well. My father in the real estate and mortgage industry since 1969. He built the company, and really we've grown based on his reputation and his knowledge. And it's actually, his experience that people believe, yes, we're investing in Fisgard, but it's backed by Wayne Strandlund, his family of other employees that have been in the business an awfully long time, and they trust us. They trust us to make decisions based on their risk tolerances and the marketplace. So it's just like John said, it's even though we have 3,400 employees, a lot of these were investors, referred from other investors, knowing very well this is what Fisgard does, this is their niche, this is their rate of return, and this is why they get it, and we're quite comfortable with that. And I just would hate to see that gone. We provide an excellent, excellent source of mortgage funds, especially in this day and age when mortgage guidelines are tightening up, lenders are leaving the market, that we fill a niche. In our particular case, slightly different than what you guys might do, or mainly first mortgage lender. But you get rid of these private funds, and where are people going to go? It's already hard enough for a lot of self-employed or bruised credit, little bumpy road type borrowers to get financing. And I think we'd see a big impact, especially in British Columbia. The market's hard enough.
Do you think it might affect, there's been some suggestion that, taking out some of the mix in this province might unduly affect rural communities where they don't have access to conventional lenders like banks and credit unions. Do you have any comments about that?
Most definitely. We go into some selective smaller markets. I know of other mix, especially up in the interior and also into Alberta as well, going into some of the smaller towns, which would be more than a commute from the lower mainland, for example. If they were to disband or couldn't afford to compete because of their size, if you're living in the upper reaches of Vancouver Island, for example, and your credit union has said no, I have no idea where you'd go. Also, when we're talking about relationships with investors, I've been around long enough now where I'm now having the second generation of my investors, their families come to me. One of them saying, my mom has said we should be speaking with you because their investment with you has put me through university and now I have children and I'd like to put my kids' education fund with you as well. So
Okay.
there's a mix are very important. In my own opinion, it appears that they've worked very well in British Columbia. They've had their problems in other provinces. We haven't, with our requirements with FICOM and also presently with the Securities Commission. It seems to be working.
So you view the success of mix in British Columbia as what are you referring to, the caliber of the industry here, the regulation that's currently in place on the mortgage broker side is contributing to the success of mix?
Yes, most definitely. I believe there's enough regulation, there's enough guidelines and guideposts and checks and balances that we currently have. It's not going to stop fraud. No matter what regulations are put in place by anyone, if someone decides knowingly to go over that line, that's not going to stop it. Right now, I would say 99.9% of all mix are run very ethically and for the right reason.
All right. So for you, Gord, the road ahead, and if you, Gord, could decide exactly what that would look like, what do you see your ideal vision of regulation for investors in mix?
I wouldn't change much from where it is. I might turn around, as one of our mix is growing in size, perhaps there should be a regulation. Much as Hali has said, we're nowhere near as big as Fisgard. But when a MIC gets to a certain level or has a certain number of investors, then common sense would tell us, come on, they all can't be family and friends. So at that point, perhaps there is the extra cost in doing that, and perhaps it is an exempt market dealer at that level. But gosh, there's so many MICs that are anywhere from John's MIC at 1.4 million to $5 or $6 million. If you had a $6 million MIC in Campbell River, that's important to Campbell River. It can't stay alive with all the new costs.
Okay. Hali, if you could provide VCSC with some comments about their proposal and what you would see as the correct road ahead for mix, what would you say to them?
I don't think I could give them a correct road ahead, but I do believe that disclosure to the investors is ultimately important. I think we're doing a good job on that already. I do believe that there should be more education requirements as far as, the people running the MIC, $234 million of other people's money. I think you better know what you're doing. Do I think that, like I mentioned earlier, do I think the exempt market dealer is going to solve any issues that VCSE sees? No, but there's got to be something else. I don't know what it should look like, what it should feel like, what it should be called, but there should be another level in there. And I wish it was as simple as say, yes, this is what it is, and that's the way we should go.
Okay. And John, any final comments from you?
We're aging. I hate to say it, guys, or Gord and I are anyways.
Excuse me.
But we're not going to be around forever. And we've learned through the School of Hard Knocks how to set up the mix. Your dad did that too.
Yep.
I ultimately think there should be a training course. Somebody could become a DI or designated individual after 2 years and then get a MIC going. And I believe there should be a full training course. And once you get, like our family and friends MIC doesn't have a line of credit. We don't leverage. And once you start playing the extra game and go a step further, that's where maybe gears should change within BC Securities Commission too. But I would welcome a training course for MIC management I think it's required. I take it because I might be missing something even with all my experience. And I'm always willing to learn. And I'd love to see that course come out.
Good point.
I agree. Well, even with, mortgage brokers placing other people's private mortgage funds, there's no education for that either. It gets even beyond the mix, which is another discussion entirely. But I think it's a huge gap, and somewhere where they shouldn't be treading at all, as far as I'm concerned. Just because you know how to broker a mortgage doesn't mean you can be placing someone's RRSP funds into a private sector mortgage somewhere, collecting a fee and walking away. I think it's okay for those that understand what it is, but having a course or some formal education would be extremely beneficial. And ultimately, we're talking about the investor's money. What's best for them? What makes them feel most comfortable? And if it's education and regulation, that's fine. We're all ready for it at our particular company. But again, there's some size there.
Yeah, but I'm ready for it as a small broker that does a lot of private lending with individuals with RSP money or private money. And it's hard to counsel some of these people, and just had a couple this week that have had windfalls, and they want to get their money out like yesterday, and I'm trying to slow them down. Crawl, walk, run. Just don't jump into these deals. Keep your money in GICs for a while until I get something that's comfortable that I'm willing to place your money with. And because there's, as Gord said, there's lots of fraud, there's lots of unknown with some of these files, and the type of deals that we do, because we're not first, we're seconds, I'd say 70% plus are shredded before they ever get to an investor, because there are problems with those files somewhere.
You think about it though, the mortgage investment in itself, Canadians believe in real estate. I think they believe in the security, they believe in the value of it. Being able to provide a reasonable return for risk, fantastic. The fact that a mortgage investment corporation pools your risk, not just invested in one particular mortgage, giving them that opportunity to feel, yeah, I really like this type of investment. I like the security. I like the fact that I'm secured by 400 mortgages as opposed to being in one or in a syndicate of just a very few investors. I think that's a really good thing for our market. I think it's good for Canadian investors. It's a real shame if we keep making it more difficult, and more difficult meaning more expensive for us to run our companies, and some of those scaling right back. It's also important to note that in British Columbia, the MIC community is pretty close. I refer a lot of deals to these guys. We have our niches. We fill a very important gap between the banks and no mortgage at all, no ability to stay in your home. If I get an application from a broker in a property in Castlegar where we don't lend, I'm going to find a MIC. I'm going to find someone else that's running a MIC that's a good manager, making good decisions, and I'm going to refer that broker to them.
We also cooperate, which we're doing right now, on a foreclosure and trying to deal with it together and trying to max. And at one point in time, Hali's going to be in this situation that she may have to put weight on me. But at least in the meantime, we're dealing together with trying to reduce lawyers' fees, etc., on this foreclosure to protect all the investors that are involved in this file.
And the borrower.
Yeah.
The borrower too. So whereas if it was two different separate financial institutions that really couldn't care less with big expensive lawyers, they're not going to work together on this. So there's quite a community out there. Yeah. You're right about your aging population of MIC managers, but it's an.
I like the hands.
I know. Sorry, guys. But really, it would be, in my mind, it would be extremely unfortunate if not only the borrowing public in British Columbia saw a reduction in the availability of funds because of some of these smaller MICs going, etc., and the investment as well. It's a good investment.
Well, that's a good point to end off. From what you've said, you believe in regulation, you believe in education. You're just looking for the right level, the right touch. And I want to thank you all for joining us here today. Thank you.
Thank you.
you,
It's a
Samantha.
pleasure.
Thank you.